See, Michael Saylor just revealed what he told lawmakers behind closed doors in Washington, and it wasn't speculation. It was a blueprint for a US Bitcoin reserve. In a CNBC interview, Saylor confirmed he's been lobbying for a strategic Bitcoin reserve bill. And here's how he pitched it. The United States ought to own a large part of cyberspace, and Bitcoin is the next frontier. He compared it to land. Over the past century, America bought about 78% of the land it owns today for just $40 million. Think about that. The Louisiana Purchase, Alaska, territories that cost pennies on the dollar and turned into trillions of dollars of value. Those land purchases shaped the destiny of the nation. Saylor's argument is that Bitcoin is the modern equivalent, except this time the frontier isn't physical, it's cyberspace. And just like the US once had to secure its physical territory to grow, he says it now has to secure its digital territory. And that's why he's making this pitch in Washington. Lawmakers may not care about balance sheets or treasury strategies, but they understand land, they understand gold, they understand energy reserves. By using those analogies, Saylor is translating Bitcoin into their language: national security, strategic resources, future growth. He's also warning them corporations aren't waiting. Around 180 public companies worldwide already hold Bitcoin on their balance sheets. That means corporate America is front-running Congress. Companies are locking down digital capital faster than the government, and if the US doesn't act, it could end up in the same position as it did with oil or semiconductors, playing catch-up in a race it should be leading. So when Saylor tells lawmakers the US should own a large part of cyberspace, he's really saying, if you don't secure this frontier now, others will, and you'll regret it later. So let's imagine what that actually means. If the United States adopted a strategic Bitcoin reserve, it wouldn't just be another line item on the balance sheet. It would put Bitcoin right alongside the strategic petroleum reserve created in the 1970s energy crisis, or the gold hoard at Fort Knox that backed the dollar for most of the 20th century. Oil, gold, and now Bitcoin. The US would be signaling that digital capital is just as vital to national security as energy or precious metals. And the geopolitical impact would be enormous. Allies like Japan, South Korea, and the EU might feel pressure to follow, to avoid being left behind in a US-led digital standard. Adversaries like Russia and China would almost certainly accelerate their own strategies. Russia has already talked about using Bitcoin and crypto rails to bypass sanctions. China has pushed its digital yuan to challenge the dollar's dominance. A US Bitcoin reserve would be seen as a counterpunch. And remember, El Salvador already has a Bitcoin reserve. Yes, it's tiny compared to the US, but symbolically they've already set the precedent, a sovereign nation holding Bitcoin as part of its reserves. If the biggest economy in the world joined in, it wouldn't just validate El Salvador, it would make Bitcoin a sovereign asset class. So ask yourself, what happens if this snowballs? The US buys Bitcoin, and then allies like South Korea, the UK or Canada could feel pressure to follow. Maybe even resource-rich countries like Saudi Arabia or emerging markets like Nigeria or Argentina start looking at it as part of their reserve diversification. Suddenly, Bitcoin goes from a corporate treasury play to the foundation of a global reserve race. That's the level Saylor is trying to elevate the conversation to. He's not just saying buy Bitcoin, he's saying make Bitcoin part of America's grand strategy. Now let's talk markets. Even before governments enter the picture, corporations and ETFs are already soaking up more Bitcoin than miners produce. BlackRock, Fidelity, and others are acting as constant buyers on behalf of institutions. Public companies like Strategy are buying even more. Now add the US Treasury as a steady buyer. That isn't just another whale, it's a structural bid. The kind of buyer that doesn't flip in and out but accumulates and holds. What happens in that scenario? The float on exchanges shrinks. Institutional investors scrambling for exposure are forced to pay higher prices. Retail is competing not just against hedge funds and corporates, but against governments. That's when you get a liquidity crisis. There simply aren't enough coins to satisfy corporations, institutions, and nation-states all at once. When governments build reserves, some, like oil, are meant to be tapped, but others, like gold, are essentially untouchable. Saylor is clearly framing Bitcoin in the gold category, a strategic sovereign asset off the market forever. So ask yourself, what happens when the largest economy in the world, with the deepest pockets, signals to the market that Bitcoin is no longer optional? It's strategic capital. Gold gives us a hint. When the US stockpiled gold in the 20th century, it supported a bull run that lasted decades. Saylor argues Bitcoin could be the base of the 21st century. If he's right, a strategic Bitcoin reserve wouldn't just lift the price, it could permanently rewrite the ceiling. So is Bitcoin $100,000 in that world, or $1 million? Or do we stop thinking in dollar terms entirely, because the dollar itself becomes the thing backed by Bitcoin? Of course, we have to ask, is this realistic? Right now, Washington is cautious, Bitcoin is volatile, politically divisive, and regulators are still catching up. But Saylor knows this. He's not expecting a bill tomorrow. What he's doing is planting the seed, reframing Bitcoin not as speculation, but as strategic infrastructure. And let's not forget, the US has a track record of building strategic reserves in energy, in food, in metals. Why not in digital capital? And if the US ever decided to act, how would it actually do it? Would they announce it to the world or accumulate quietly in the background? History suggests they'd move quietly. Central banks buying gold rarely announce ahead of time. They accumulate slowly, steadily, so they don't move the market against themselves. If the US wanted a strategic Bitcoin reserve, it could follow the same playbook. Buy through ETFs like BlackRock and Fidelity, work through over-the-counter desks, or scoop up coins from distressed sellers during market drawdowns. But there's another path, the bold move, acquire strategy itself. Overnight, that would hand the US control of more than 600,000 Bitcoin. Think about it, America could lock down over 3% of all the Bitcoin that will ever exist. And it wouldn't even be unprecedented. During World War II, the US government nationalized entire industries it considered strategically vital, from railroads to shipbuilding to energy companies. More recently, governments around the world have stepped in to bail out or take control of banks when they viewed financial stability as a national security issue. So imagine this scenario. Instead of quietly buying Bitcoin on the open market, the US makes a single move and secures the largest corporate Bitcoin treasuries on Earth in one stroke. Cheaper than building a weapons system, faster than trying to accumulate over years, and instantly turning Bitcoin into a matter of national security. So which play do you think Washington would choose? Quiet accumulation in the shadows, or a bold acquisition that would change the game overnight? So here we are. Michael Saylor has laid the idea on the table. A strategic Bitcoin reserve for the United States. If it happens, it could transform Bitcoin from a corporate treasury asset into a sovereign reserve currency. It could spark a global race for digital capital. And it could permanently change the supply and demand dynamics of Bitcoin forever. But will it happen? That's the billion-dollar question. The US could move quietly, stacking Bitcoin in the shadows the way it once stockpiled gold. It could act boldly, acquiring strategy outright to lock down one of the largest Bitcoin treasuries on Earth. Or it could hesitate, stuck in political gridlock, and let rivals front-run it in cyberspace. And that's the risk. If America hesitates, what happens when the first strategic Bitcoin reserve isn't built in Washington, but in Beijing or Moscow? What happens if China, Russia, or even a smaller nation like Saudi Arabia or Brazil makes the first bold move? Saylor's warning is clear. Delay has a cost. And in the race for digital capital, the first mover may lock in advantages that last for decades. So now I'll throw it to you. Should the US adopt Bitcoin as a strategic reserve? Would it strengthen the country's future or tie it too closely to a volatile asset? And if America waits, who do you think will move first? Drop your thoughts in the comments, and don't forget to like, subscribe, and stay tuned more